Before the market opens, let's identify where the highest probability supply and demand zones are forming. By the end of this forecast, you'll know exactly which currency pairs are worth watching this week and which ones I'd avoid. Let's get right into it. For the past several months, we have been predicting this move up in the DXY on the US dollar. The fact that we broke this high has given us a weekly trend line to the upside, and we are moving in the direction I've been referring to this entire time, up to this weekly area of supply, and I am expecting the dollar to continue to push up. I'm not saying we won't see pullbacks along the way, but I am expecting this weekly trend line to hold, to push up to this weekly area of supply. As far as what I will be watching out for this coming week, you can see we clearly created some sort of low here. We are getting somewhat overextended from this trend line. So what I'll be watching out for, which will be a very, very bullish sign on the dollar, is if we can get this high removed. If we can get that high removed, we will have an updated trend line, something like this, and that will be our new trend line guide to determine how much stronger the DXY will continue to be. I think we will hesitate around the 102.58 area, around there, but ultimately we are certainly bullish on the dollar, and I've been predicting it the entire time. This is the 4-hour chart of the DXY. You can go back, watch my previous weekly Forex forecasts. I called out this area of demand, which we've seen a move off of. And last week's forecast, I called out this area of demand. We saw a beautiful move off of the zone. Again, called out in last week's weekly Forex forecast. Now, I don't really consider this an upward trend. To me, it is just momentum. What I'll be looking for is a significant pullback, creating a very obvious valley. And then at that point, I will consider it a trend. I think that this momentum could die out. I prefer trend over momentum. Yes, they are different. When we broke this area of supply, that left us with this area of demand at 101.04. I don't like that it's a reaction off of our previous called out area of demand, but if we do pull back, I'm expecting to see some sort of rally from this general price point area again to continue to see dollar strength. But again, we are somewhat overextended here. So it wouldn't surprise me to see the dollar maybe start to fall off a little bit, but ultimately we are remaining bullish on the DXY. On to the Euro US dollar daily time frame. Very nice daily downward trend line. If we throw a channel tool on this trend line, you can see we are quite overextended here. We are sitting well below the bottom end of that channel, so it wouldn't surprise me to see a pullback near the means here and maybe see another move to the downside. Even if we do pull up above the trend line, we're going to have a nice supply zone here. And just like the opposite of the DXY, we are looking out for the removal of this low. If we get that, we will have a new updated trend line here, which will be our guide to determine what direction the Euro US dollar is going into. As far as the 1-hour chart, we caught this beautiful 1-hour demand zone trade here. Quick one, but this was called out beforehand in the daily market breakdown video for the Diamond members. So nice, quick little demand zone trade there. And then obviously we came back and broke the zone. And why? Well, because the daily trend is down, we didn't want to get greedy and look for a massive trade here. So that is the power, of trade management. As far as trading the Euro US dollar goes right now, this 4-hour trend line is actually a little bit more better, in my opinion. You can see if we throw a channel tool on this trend line, we are pretty overextended. We are sitting at the bottom end of the channel. So if you want to day trade and you day trade the 15-minute or the 5-minute time frame, I do prefer the 15-minute for 4-hour trend lines. As long as this trend line's holding and we are sitting above the 50% mark, you could justify day trading short a 15-minute or a 5-minute time frame trades. And there is a 4-hour supply zone sitting above. Not my favorite zone, barely qualifies in my opinion. Very big zone. So what I would recommend in a zone this size is to wait for it to be hit, and then at that point we can look for confirmation trades on a 15-minute time frame, which means we are essentially looking for 15-minute time frame supply zones to be formed as this 4-hour area of supply is contacted. All right, moving on to the forecast for gold. You can see nice daily downward trend line. However, very overextended, very similar looking chart to the euro. I think we could see a pullback on gold to push above the 50% mark before we can maybe continue to sell off here, just kind of base off of this overall trend. Even if you do get a pullback to the supply, that's going to be a decent area to look for maybe some swing trading and some day trading shorts inside of that zone. As far as the 4-hour chart goes, there's really not much going on. This is pretty bad price action. pretty much just sideways. No trend, nothing going on. This supply zone we already got a trade off of right here is a beautiful trade. You can go back and confirm that in my weekly Forex forecast by going back and just simply watching them. At this point, as far as the 4-hour chart view goes, I want to see a removal of this supply. It's a proven supply that we already traded at, which means any demand that removes it, it's going to be a pretty strong area of demand. That's what I'd be waiting for as far as the 4-hour time frame goes. As far as the 1-hour chart goes, this 1-hour supply zone, we were talking about this in last week's weekly Forex forecast. Beautiful trade called out in last week's weekly Forex forecast. If that is not a reason to hit that subscribe button, these free trades, I really don't know what is. So hit that subscribe button, like the video if you guys appreciate my analysis. So why were we so aggressive with trade management off of this trade? You can see we got a nice reaction off the zone, but we didn't get a large move. Well, the reason was because, okay, we were trading with the daily downward trend like we were talking about, but which means typically we can look for larger risk rewards, looking for entry time frame short trades when our higher time frame is trending down. However, we were so overextended on the higher time frame that I thought it was best to just look for a quick trade here. Again, that is the power of trade management. It absolutely changed the way I look at trading as far as trade management goes. Before, I would have ignored a zone like this, but when we understand we can just change the way we manage trades, you actually get way more opportunities. As far as trading gold goes now, we have a demand zone down below. It's really not my favorite zone. I personally will be ignoring this one. If you want to trade it, you can be aggressive with trade management. 1-to-1, I think we could see a small move. It's just not my favorite type of basing for the zone. So aggressive trade management, and what I actually would prefer is 5-minute time frame confirmation. You might notice this 1-hour supply as well. It's pretty decent. Almost got a reaction off of the supply. It's kind of setting up for a liquidity trap now. I actually don't mind it. It's a little close, but I think it's fine. What this means is this is essentially a very well-known area of resistance, especially on like the day trading time frames like the 5-minute and the 15-minute time frame. A lot of retail traders will be looking at this area of resistance, most likely trading it, which means they're going to enter somewhere in this area with their stops all above right into our 1-hour area of supply. So when they're selling short, they are essentially going to be buying their shares back if they lose this trade, which means we will be selling to the retail traders. That's the power of a liquidity trap. So that's our supply zone for a short trade on gold. And again, I don't want to get greedy with it. Could it move like this? For sure. It definitely could. I don't want to get greedy because we are so overextended. If we were at a decent point in the daily downward trend line, instead of being down here, let's say we are more near the trend line, then okay, I think we could justify looking for a larger trade. But right now, it's all going to evolve around this 1-hour area of supply. I think it'll be good for a quick move to the downside, maybe a 1-to-1. And if we remove the supply, any demand zone there is going to be a nice long trade. Still going to be counter trend, so we still want to be aggressive with trade management on that trade as well. But nonetheless, it's all going to revolve around this 1-hour area of supply on gold. On to the forecast for the S&P 500. Very nice weekly trend to the upside. We are a little bit overextended. We are clearly seeing some sort of sell-off here. The question is, will we continue to go up, or will we pull back to the trend line and maybe see some sort of reaction off of the trend line over the next couple of months? The daily time frame here really shows what's going on. We really are just hesitating. We don't know. We're basically bouncing back and forth between these price areas. Very sideways price action, very evident here. So really tricky to trade this chart right now. And since the weekly trend is up, all shorts must be traded with aggressive trade management. So as far as zones go, I don't see any trades right now. You guys know, if you've been following my forecast for a while, we called out that trade beautifully, but that trade unfortunately came to an end. Right now we have a 4-hour downward trend line. It might look good. It might feel like to you we can look for a massive trade off of this area of supply. This trend line. In my opinion, you can, but I do not recommend it. Since the higher time frames are pretty much always trending up on the indexes, we always want to be aggressive with trade management for short trades. We are sitting just below the 50% mark, so if we get maybe a push up above the 50% mark, as long as this trend line is being respected, 15-minute time frame shorts are definitely going to be good. So my opinion on the S&P, it's all revolving around this trend line. If you're a day trader, shorts are good on the day trading time frames if the trend line is holding. But again, aggressive trade management definitely needed. As a swing trader like myself, I don't day trade. If we get a break of this trend line, that's what I'm going to be waiting for. If we get a break of the trend line, any demand there is going to be a very good zone. And this is a trade that we can look for a larger risk to reward off of. We can look to target the all-time high. So that's what I'd be waiting for as a swing trader. I'm not seeing any demand zone down below. This is already tested. One of the positive things about this zone that was tested is the fact that it was barely tested. So I do think we could see maybe a reaction off the zone again. I personally do not trade at tested areas of demand or supply, so it's not something I'm going to be doing. So as a swing trader myself, I'm going to be waiting for this trend line to be removed, waiting for demand zone to be formed, and looking to trade off of that area of demand. So for now, all revolving around this 4-hour trend line to the downside on the S&P 500. Moving on to the forecast for the USDJPY, we can throw a channel tool on this weekly trend line. We are just peaking above the 50% mark, so not quite overextended. But it does make me a little bit nervous. I think we could maybe see a small sell-off. The daily chart, I'm not going to blow it up here, but very, very overextended. So for now, to be honest, I am not really seeing too much. I wanted to draw this area of demand or possibly demand here, but I don't feel comfortable doing it. Very borderline for me, so I'm just simply not. As far as this trend line goes, you can see we are a little bit overextended. We are sitting just above the 50% mark. So waiting for a pullback below the 50% mark, as long as this trend line holding anywhere in this area, that's going to be the golden zone for looking for 15-minute or even 5-minute time frame longs. And what I mean by that is however you trade. If you trade supply and demand, support and resistance, chart patterns, indicators, oscillators, whatever, I would be doing it on a 5-minute time frame or a 15-minute time frame as long as the trend line's holding. So that is really the only trading option I see. I am not seeing a lot of zones right now on the USDJPY. Moving on to the forecast for the GBPUSD, I want you guys to focus on these two charts. This is my weekly time frame and this is my daily time frame. These are the higher time frames to the 4-hour and the H1. These are the time frames that we use as a guide to determine how to trade and how to manage our trades on the 4-hour and the 1-hour time frame. You can see the weekly chart is very sideways and the daily chart is sideways as well. So as far as trading it, whether you're getting it long or short, based off of the sideways price action on these time frames, we want to be aggressive with trade management. Right now, we have a couple of options for trading. On the 1-hour time frame, we have our trend line drawn from here to here. This is a beautiful reaction off of our trend line. So not only do I call it the demand zones, but I call it the properly drawn trend lines as well. And we almost, not always, but very commonly do see nice reactions off of our properly drawn trend line. So nice reaction off the trend line. That's what I always talk about. Trade with the trend lines on your entry time frame. You might have got a nice little trade off of this. So as far as trading it goes now, as long as this trend line's holding, 5-minute time frame shorts are good. If you're bullish, we just want to wait for this trend line to be removed, hopefully leaving us with the demand zone, and that will be our long trade. So if you are bullish on the pound, you're gonna have to be a little bit patient right now and just simply wait. As far as zones go, we have one zone that is currently in play. You can see we had this upward trend line here. This trend line broke, so full transparency, this was a trend line I called out before, and it broke. It's maybe a small reaction, but it ended up breaking. So it's not 100%, just trying to be transparent here for all of you. When that trend line broke, it left us with a 4-hour area of supply at 1.342. This supply to me, I would rate maybe like a 7 out of 10. It's really not my favorite zone. So if you want to trade it, we're basically going to wait for this supply zone to be hit, and that's going to be our trade. Aggressive trade management is needed though, again, based off of the higher time frame context that I was showing you guys. So that's our supply zone for a short trade. You can also look for 15-minute time frame shorts in there using confirmation as well. And let's say we break the supply, any demand there would be our potential long trade as well on the GBPUSD. All right, on to the USDCAD forecast, the country I am from. Let me know where you guys are from in the comments down below. So I talked about this weekly demand that was in control. So we already have a higher time frame demand in control. Inside of that weekly demand, we had a daily area of demand. You can go back and confirm I had all these zones on my charts before these trades took place. Nice move off of our daily area of demand. We also had a 4-hour area of demand right here. And I was telling the members, we want to have a wider stop here to give us more wiggle room due to the fact that we have a weekly and daily demand in control. You don't want to just have a tight stop under the zone. We want to give it wiggle room because of the higher time frame context. So we did just that, cut a beautiful trade. And if you are long from this trade, basically we could be just riding out this trend line right now. I think that makes a lot of sense. Just kind of trail your stop with the trend line. maybe get a nice trade out of it. So as far as trading the USD CAD goes right now, 15-minute time frame longs are good as long as this 4-hour trend line is being respected. And the beautiful thing about that is it aligns with the higher time frames. As far as the USD CAD goes now on the 1-hour time frame, I was also pointing out this 1-hour area of supply for a quick 1-to-1 trade. Now, unfortunately, some people didn't get the entire move off of the zone, but a 1-to-1, like I have in my risk reward tool here, was very plausible, and we got that area of supply as a trade. Called out beforehand in the daily market breakdown videos for the Diamond members. If you want to trade alongside myself and the members, join the Diamond membership, where you will have access to the 38-page supply and demand zone PDF, which will be your complete trading guide, the daily market breakdown videos, which are forecasts that I release every single night for the members to trade alongside myself, step-by-step video lessons A to Z covering everything you need to know on supply and demand trading, the Sunday strategy Zoom session where members submit homework, and it's an interactive 1-hour call where we go over all of your homework and every trading related question, private access to myself inside of our private Discord group where I answer all of your trading related questions, and finally the Sunday live stream forecast where we break down over 30 markets together. And it's not just me. Here are some of the members and some of their trades they've been taking lately, absolutely killing it. And we also have some amazing reviews from some of the past members sharing their experience within the group. So if you're ready to trade alongside myself and the community, join the Diamond membership today. Links in the description down below. So as far as trading the USD CAD goes now, we have that 1-hour trend line holding. That could be your guide for longs on a 5-minute time frame. We also have a supply zone sitting above this supply up here. But again, just like I was saying off of this trade, I told the members, if you are going to take this trade, we have to be aggressive with trade management, because when price pushed down here, a higher time frame demand became in control. A weekly and daily demand in control down here, much stronger than little H1 areas of demand. But it doesn't mean we can't catch small trades off of that zone like some of the members did. So we have the 1-hour supply above. I think we could maybe see another small move off of the zone, so a little bit of money to be made. But again, aggressive trade management is going to be needed. Also, what you want to be watching out for if you are a swing trader, if we remove any of these zones and we have any demand zones formed, those are going to be our demand zones to add from our long trade that we got down below. So that's what I'll be waiting for as a swing trader to add to my position. All right, moving on to the forecast for the Aussie US dollar. You can see this purple box here. That is our area of support, our liquidity trap for the real demand that is down below. We are seeing a small reaction past couple weeks off of this area of support. I do think it will be short-lived, again, because we are bullish on the dollar. So as far as trading it goes now, I only really see, actually there's two setups. So if you are bearish, we have this supply level sitting above over here at 0.70. It's a pretty decent area of supply. It goes along with our dollar bullishness. So a short here, I think, could be a pretty nice supply zone for a short trade. If you are bullish on the Aussie, we have a demand zone sitting right down below at 0.694. It's a decent area of demand, kind of a liquidity trap here. I don't love it for liquidity. It's a little far for me to really consider it, so I will be removing it, just trying to show you what I'm talking about here. It's a little close. If it was a little bit closer like this, I'd be more comfortable having that on my charts. However, it's a nice rally-based rally. The move away is pretty good. Again, we are bullish on the dollar, so buying the Aussie would kind of go against that, which is fine. We could just be aggressive with trade management. I wouldn't be surprised to see a 1-to-1 move off of this area of demand. So there is a little bit of money to be made here. You just want to be aggressive with trade management if you are, in fact, going to take that area of demand. If you're bearish, and let's say we do not get the pullback to that supply, but instead we get a reaction off this area of demand, then we break the area of demand. Any supply zone there, that's going to be our short trade for a nice trade to the downside. Moving on to the forecast for the USD Swiss. I didn't want to draw this trend line before, but at a second look here, I decided to draw it. Not my favorite trend line, but in my opinion, it just barely qualifies. So this trend line is definitely going to be our guide to determine where the USD Swiss is in fact going. We throw a channel tool on it. It's going to show that we are not overextended. We are getting there. We are getting towards the 50% mark, but I still think buying the USD Swiss is kind of our preferred option. And the issue with this chart right now is I don't have any trend lines here. This trend line is basically irrelevant. I'm just going to remove it. I don't have any areas of demand up here. However, we do have a demand zone sitting down below over here. So if we do get a deep pullback in the dollar, on the US dollar, That's going to be our demand zone. The initial one at 7.99. We have a couple down here, but we'll talk about those another time. So as far as trading it goes now, I'll be honest, not really seeing a whole lot. What we could wait for is a pullback, creating a valley, and wait for the higher high. Then we will have a trend line here, and then at that point, I would feel more comfortable suggesting 15-minute time frame longs on the USD Swiss. On to the forecast for crude oil. You guys know, if you've been following my forecast, we called out this demand zone perfectly. We literally called the bottom on oil. Go back and check it for yourself. The issue now is we are so overextended. We have pretty much gone up in a vertical line here on crude oil. And why I think that could be coming to an end is we have this daily downward trend line coming into effect. We are near the trend line. So it wouldn't surprise me to see oil kind of sell off here maybe over the next couple of weeks. I think we definitely could see that on crude oil. If we break this trend line, however, I really think that could really show us that oil could be going much higher. If we get a daily demand zone here, that's going to be our daily demand to look for swing trade longs off of. As far as trading oil goes, not really seeing any zones. I don't feel comfortable drawing any of this. This was an older supply zone that I personally ignored. I thought we could see a small move off of it. So not every trade I call out is a winner, obviously. This trend line, very overextended. I'm going to remove it. Right now, we just have nothing but momentum. In my opinion, momentum isn't super sustainable. I want to see a significant valley and a higher high. That will give us that trend line, and that will be more of a sustainable move to the upside. So that's what I'm going to be waiting for on crude oil, some sort of significant trend. But as far as zones go, I don't feel comfortable drawing any of this. Hopefully you guys appreciate that. I only like to point out, the higher quality situations, and I'm just not seeing anything right now on crude oil. Alrighty, last but not least, we are on to Bitcoin. We recently broke the daily downward trend line. Not the best move to the upside. I mean, we're kind of just hesitating along here. Nothing really super bullish. We do have a daily supply above at 71,314. I think if we do pull up, that's where we are most likely going to see Bitcoin start to sell off. As far as trading it goes now, we have really two options. So if you are bullish on Bitcoin, we have a 4-hour trend line right here. It's drawn from here to here. This is a reaction off of our 4-hour trend line. So as long as this trend line is holding and you are bullish, that trend line will be our guide for 15-minute time frame longs. If we break the trend line, we're probably going to have some sort of supply up here. That'll be good for some sort of maybe short to the downside. So if you're bullish on the day trading time frames, this is our trend line guide for longs. Not really seeing any new zones though. And on the 1-hour chart, unfortunately, just due to timing, just the timing of when these forecasts are, I couldn't point out this 1-hour supply zone trade, but I know one of the members caught this trade from our Discord group. Beautiful supply zone here that removed this trend line. Beautiful reaction off of the zone. Kind of a sketchy situation here, but nonetheless, great move off of this area of supply. So as viewing it on the 1-hour chart, you want to be watching this trend line. We are so overextended, it's becoming irrelevant at this point. I'm still going to keep it on in case we do get a push up. But if we do get a push up back into the channel above the 50% mark, as long as this trend line's holding, you could be looking for shorts on a 5-minute time frame. If you are bullish and you're reviewing it on the 1-hour chart, we really only have two options. We either need to, one, wait for this trend line to be removed or wait for the supply to be removed. And any zones that remove those are going to be good areas of demand to look for longs on Bitcoin. So all going to revolve around this 1-hour trend line if you're bearish. And then again, we want to watch out to see what removes the areas of supply. And if you're bullish, again, we have that 4-hour trend line as our guide for day trading longs. If you guys want access to my full-length forecast, join the Diamond membership where you will have access to that as well as my daily market forecast, the full course supply and demand PDF, and much, much more. Make sure you guys subscribe so you can catch next week's forecast as well. And I always appreciate a like. Thank you guys, and I'll see you in the next video.